Big news after HK closed today. Hang Seng Index Company announces quarterly review results. Two AI stocks, Zhipu and Minimax, are almost certainly joining the Hang Seng Tech Index. Why it matters once they're in. Stock Connect opens. Mainland money can finally buy. Bloomberg estimates Zhipu could attract 51 to 9 to BHKD in southbound inflows. Minimax for 7 BHKD. Combined, over 100 BHKD. Morgan Stanley expects 5 to 7% combined index weight, triggering 1 point to 5 to 1. 75 BUSD in passive buying, both up 300% plus since January IPOs. Zhipu surged 29% intraday today, Minimax 14%. But look at the numbers first. Fundamentals: Zhipu H1 2025, revenue 191 MRMB, R&D spend 1.59 for BRMB. Revenue is 1/8 of R&D. Minimax 9 meters 2025, revenue 53 for MUSD, R&D 180 MUSD, 3.5 times gap. Both are in burn cash, chase growth mode. Commercialization nowhere near R&D spend. What these stocks are worth right now has almost nothing to do with fundamentals and everything to do with liquidity. How does 5% float drive a 300% rally? Supply-demand mismatch. Too many buyers. Too few shares. Institutions scramble. Retail chases, but there aren't enough chips. Price isn't driven by value. It's driven by scarcity. Remove scarcity. And what's left? Why do they qualify? Market cap exploded. Hang Seng Tech inclusion rules are based on market cap and trading volume, not profitability. Big enough market cap and active enough trading. You're in. The cap explosion came from global AI hype plus low float supply squeeze, not revenue or earnings breakouts. Why is southbound money so eager? Pure play AI LLM stocks barely exist in a shares. Want China's OpenAI? Go to Hong Kong. Mainland investors typically hold 11 to 20% of major HK tech stocks through Stock Connect. Zhipu and Minimax will likely reach similar levels. Sustained inflows, but also means mainland money could be the biggest bag holder when lockups expire. Positioning: Hang Seng Tech ETFs and passive products roughly for BUSD and assets. At 9% combined weight, passive funds must buy regardless of price. Short-term tailwind, but post-July unlock. Free float expands. Index weights may recalibrate. Passive buying pace changes. The real issue: shares unlocking in July were acquired at rock bottom cost. Early investors got in at 1/10 of current prices or less. For them, selling at any level is a massive win. Are you buying at 300% above IPO while they cash out? Cold water. The AILLM story is real. China needs its own AI infrastructure. Zhipu and Minimax are the most advanced players. But a good story still needs someone to hold the bag. 100B plus HKD southbound is a short-term push. July lockup is a medium-term squeeze. Revenue and profit delivery is the long-term test. Two dates to remember: June 8th, earliest Zhipu qualifies for Stock Connect. Expect another rush before then. July, the biggest hurdle. Decide if you're getting off before that. Don't rush in when liquidity is thinnest. Don't stand still when the flood of unlocked shares is about to hit.